You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Friday, 30th day of June, 2023. Last trading day of the month, last day of the month, and TGIF. Thanks so much for joining. Whoever you are, wherever you are, we're just glad to have you right here, right now. Now, our format today will be a little bit different. Of course, we're going to open with our daily devotional and prayer, as we do every day. And then, as opposed to a topic that I usually have to discuss with you, I'm actually going to try to get the entire recap done before Michael comes on 45 minutes into the broadcast. So for those of you tuned in live, that's 12:45 Eastern. He'll give us a recap of what happened in the live training room. And then at 1 p.m. Eastern, 1 hour into the broadcast, for those of you watching after the fact, we'll go live on the TradingView platform and trade live for 30 minutes. Then when we're done on the TradingView platform, I will come back. Hopefully I will have the recap completed, and my sometimes co-host, sidekick, good friend, and Wall Street legend, Mr. Garrett Jones, will be joining us at roughly 1:30 p.m. Eastern, or roughly 90 minutes into this broadcast. So with that said, we should probably get started. Now, this is our second live broadcast of the day. Our first live broadcast is for members only and those who are taking the 1-week free trial. To take the 1-week free trial, go to mytradingiq.com, and right at the top of the page it says 5-day free trial. Click that button, complete the registration form, and we'll get your indicators set up for you this afternoon, so you'll have the whole weekend to mess around with them on the TradingView platform. Now, Sunday night, when the markets open at 6 p.m. Eastern, we've got a regular day, Monday. Of course, everyone knows Tuesday's July 4th. Now, when it's a Monday holiday, the weekly trading zones don't come out until Tuesday morning at 6:15 a.m. Eastern. But since Monday is not the holiday, then things will happen as normal. The Logic 247 channel will open at 6 p.m. Eastern Sunday night. The concierge trade alerts will come out shortly after the open. And then the weekly trading zones will be available for members and trial members Monday morning at 6:15 a.m. Eastern. Again, we'll be closed Tuesday for the 4th of July. And Tuesday night at 6 p.m. Eastern, the markets will reopen, even though it's still the 4th of July. I'm sure you know we're the only country that celebrates that particular holiday. And it'll be business as normal. Okay? All right then. Now, When the live training room ends in the morning at 11:30 a.m. Eastern, we take a 30-minute break and then come back for this afternoon broadcast, which begins at 12 noon Eastern. There's two different ways you can join this afternoon broadcast. Best way, go to mytradingiq.com. You only have to do this once. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before the broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, where you will have access to the question box, so you can ask questions and participate in the discussion. Now, there's going to be days you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. There'll also be days that you're just busy and can't join this afternoon broadcast live. We have a solution for both issues or situations. It's called our YouTube channel. And it's pretty easy to remember. You already know youtube.com. All you need to remember is /CFRN. That's right, youtube.com/CFRN. Not only do we broadcast live on our YouTube channel, as we're doing right now, we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. Now, for those who are new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week, but what about a month ago, 6 months ago, a year ago, 2 years ago, even more? Thanks to YouTube, you can scroll back and find out. Just pick some days at random. Be sure to, even if you don't listen to the whole episode, be sure to fast forward to the part where Michael does the recap of the live training room, and fast forward to the part where I do the recap of the Logic 247 alerts and the concierge trade alerts. Quickly, you'll see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. Now, our topic this week has been wisdom. I mean, hey, who doesn't want wisdom? However, based on our human condition, we often go about it the wrong way. Wisdom is like money. Its value compounds over time. If you regularly add wisdom to your life, you become wealthy in the ways of God. This is why it is imperative that you get wisdom above most everything else in your life. Wisdom is the ability to discern right from wrong and to understand what is true and lasting. It is your ally that will assist you in defeating the enemy. Satan is toothless in the presence of the wisdom of God. Do not attempt to defeat the enemy with your own limited understanding. Rather, crush him with the weapon of wisdom. A life built on the foundation of wisdom can withstand the winds of change and the waves of adversity. Proverbs 28:26. Wisdom keeps you engaged with God's perspective. It is a life preserver for the drowning, a compass for the lost explorer, and a light on a dark and perplexing situation. Wisdom is like gold. It's not always easy to find. There's a price to pay. There is a price to pay in the process of its discovery and in its acquisition. Proverbs 16:16. Gray hair does not guarantee wisdom, but examined experience does position you to obtain wisdom. It is possible to be an old fool or to be wise beyond your years. Young or old, smart or of average IQ, you can gain wisdom. Wisdom begins and ends with the fear of God. And we talked earlier in the week that term fear, translated properly, means respect, reverence. The fear of God means you engage His teaching with your heart and mind. Proverbs 15:33. Wisdom precludes a passive relationship with God. Wisdom means you meditate on His ways and truths. You prayerfully and respectfully ask Him why, what, and how it relates to His way of doing things. As followers of God, we have the mind of Christ through contemplation on His Word and understanding of His truth. Wisdom will then begin to reign in our everyday life. By God's grace, wisdom will allow you to synthesize multiple options into the best course of action. Wisdom can take a complex situation and offer simple solutions. Wisdom has the uncanny ability to cut through the layers of agendas and motives and get to the real issues. Wisdom is a no-nonsense defender of common sense and truth. It's very practical. Wisdom originates from God and resides with Him. He has the trademark and the patent. Anyone who attempts to take credit for its effectiveness may risk losing the rights to use it. Humility, tempered with wisdom, leads to wise decision-making. Take time to listen and learn from wise people. This could save you heartache from a relational train wreck or the loss of money from a bad financial decision. Be wise. Listen to both God and His wise mentors. You get wisdom to give wisdom, sharing wisdom's wealth with those who will steward it well. Join me in a word of prayer. Heavenly Father, we come before you in awe and reverence, acknowledging your immeasurable wisdom and understanding. As we meditate on the words of Job 28, we are reminded of the priceless value of wisdom and the depths from which it comes. And that is our scripture for the day. Let me give it to you real quick. Job 28, 12 through 13. But where, oh where, will they find wisdom? Where does insight hide? Mortals don't have a clue, haven't the slightest idea where to look. Earth's depths say, it's not here. Ocean deeps echo, never heard of it. It can't be bought with the finest gold. No amount of silver can get it. Even famous Ophir gold can't buy it. Not even diamonds and sapphires. Neither gold nor emeralds are comparable. Extravagant jewelry can't touch it. Pearl necklaces and ruby bracelets Why bother? None of this is even a down payment on wisdom. Pile gold and African diamonds as high as you will. They can't hold a candle to wisdom. Now again, that's Job chapter 28, verses 12 through 13. So back to our prayer. Just want to make sure you fully grasp that particular scripture. I encourage you to meditate on it. Father, you alone possess the wisdom that surpasses all human understanding. You are the source of all knowledge, and your understanding is unfathomable. In a world filled with questions, uncertainties, and complexities, we seek your wisdom to guide us in all aspects of our lives. Just as man cannot mine precious gems from the depths of the earth, we cannot attain true wisdom through our own efforts. We recognize that true wisdom comes from you, and it is a gift that we humbly seek from your abundant grace. Father, we confess our limitations and our inability to comprehend the vastness of your wisdom. Please grant us the humility to acknowledge our need for you and to seek your guidance in everything we do. As we navigate the challenges and decisions that lie before us, open our minds and hearts to receive your divine insights. Help us to cultivate wisdom that is rooted in your word. May we meditate on your precepts and let them dwell richly in our hearts. Empower us to apply your truth to our daily lives, that our actions and choices may be aligned with your will. In our quest for wisdom, protect us from the temptations of worldly knowledge and pride. Keep us from relying solely on our own understanding, and guide us to depend on you completely. Give us discernment to distinguish between worldly wisdom and the eternal truths found in your word. Father, we also pray for those who are seeking wisdom and understanding. May your Holy Spirit enlighten their minds, drawing them closer to you and revealing the depths of your wisdom. Guide them on a path of knowledge and insight, that they may grow in their relationship with you. And Father, as we walk in your wisdom, may our lives be a testimony to your glory. May we exhibit wisdom in our words, actions, and interactions with others. Help us to bring peace, encouragement, and understanding to those around us, always pointing them towards you, the ultimate source of wisdom and understanding. We pray this in the name of Jesus. Everybody said, amen. Well, amen. Happy Friday, guys. Been working for the weekend, and here it is. Let me give you the numbers real quick from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is up 228 points. The NASDAQ is up 183 points. That's over 1.25%. S&P 500 up 46 points. That's a little over 1%. And the Russell 2000, our man in the street, is kind of, dragging up the rear. Up 9 points, which is about half of 1%. But the good news is all four of the major indices are green. We like them to be all green or all red. As futures traders, it doesn't matter because we can trade in either direction, the drop of a hat. unlike some other markets. In the commodity basket, crude oil is up $1.07, trading 70.93 last. That's a gain of 1.5%. Gold up $9.60, trading 19.27 last. Silver up 18 cents, trading 22.98 last. That's a gain of almost 1%. In the Asian markets at the close, the Nikkei dropped 45 points, Shanghai rose 19, and Hang Seng fell 17. And in the European markets at the close, FTSE up 59, the DAX up 201, the CAC up 87. Now for the FTSE, that's almost 1%. For the DAX, it's 1.25%. And for the CAC, it's almost 1.25%. So we had a mixed day in Asia. It was a green day for the UK. And so far, it's a big green Radio Friday here in the US of A. So with that, we will jump to a recap of the Logic 247 alerts. Let me just get my screen formatted. Hang on. Now let me put it in the right place. There we go. All right. Now, Logic 247 is our 24/7 around-the-clock E-mini alert service. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. So a Logic alert can come out at 2 a.m. or 2 p.m., but it always has time built in for you to study the alert, study the 30-minute chart, see with your own eyes the window of opportunity that the alert represents, and then when price reaches the entry point of the alert, you'll be prepared with your smaller time frame to take action. We have now issued over the last 256 weeks 14,600 individual handcrafted alerts. 14,600. Since the markets opened this past Sunday night, that's the beginning of our week, Sunday night, 6 p.m. Eastern, we've issued a total of 75 alerts, 11 never triggered, still waiting on 9. We've had 55 actionable alerts, of which 10 or 18% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a simple process we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Here's the caveat. Never risk more than $300 per contract per trade, and never risk more than what you plan to take out of the trade. I went through all of the Logic alerts yesterday for the entire week, so if you missed yesterday's broadcast, you can see everything except what I put out last night and this morning. But as a member or a trial member, you have access to all 14,600 alerts that have been issued. So, if your plan is, let's say an alert has $2,000 of potential profit from the entry price to the final trade to target, but you know you're going to get out at the first target, the initial target, which gives you your goal for the day, then your risk should be commensurate with that. If you plan to stay in longer to the second target, the third target, the fourth target, you still shouldn't risk more than $300 per contract per trade. So over the last 256 weeks, we've averaged 20% or less of the alerts being stopped out. And while we had a bumpy start to the week, here it is Friday, and we're sitting at 18%. Now, we've still got 9 in the pipeline, so this number may change. Valerie will do the final recap this afternoon. Now let's go to the concierge trade alerts. That was our original alert service many years ago. And it's a little bit different. Now, it's not an either-or proposition. The two actually work hand in hand. As opposed to coming out around the clock, the CTAs are posted shortly after the Globex open. Last night, Globex opened at 6 p.m. Eastern, so the Friday session actually began last night at 6 p.m. Eastern. The Globex market opens at 6 p.m. Eastern, Sunday night through Thursday night. So the Friday session began last night, even though it was still Thursday here in the U.S. 10 minutes after the open, all of our members and trial members received this information right here. In fact, because this broadcast is open to the public, there's a chance you did not receive the numbers. So grab a screenshot, okay? Because we're going to walk through each and every one of these individual markets. What do you do when the report is published? Well, we'll just use the ES as an example. Go to the 30-minute chart, make note of where price is at this time. Then draw a line in the sand at the long target, a line in the sand at the short target. If price gets above the 30-minute BBC, that's the green line you're going to see on my charts, stands for bull, bear, cross. When price gets above it, we're bullish, we anticipate higher prices. When price gets below it, we're bearish, we anticipate lower prices, whether it's on the daily chart or the 30-minute chart. Price gets below the 30-minute BBC, it's attempting to reach the short target. Pretty simple, right? You still got to look left, though, to spot potential obstacles, previous swing highs or swing lows that could become current support or resistance. And over time, you'll learn how price behaves at a weekly trading zone. Now, this is important. Price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to reach the zone overhead. Price is below the 30-minute BBC, it's trying to reach the zone below. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance, until proven otherwise. As you learn to implement the weekly trading zones into the strategy that we teach you, and as you learn to use the indicators that we provide, the zones will become one of the most important tools in your trading toolbox. Now, this all sounds incredibly simple, and it is by design, if you can resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. So let's go take a look at the charts. We will start with the daily chart, as we always do. There we go. Now, 2 weeks ago today, we put in this high. That's not an all-time historic high, but it is the most recent swing high. Now, this day was Juneteenth, a holiday, but global markets were open. Tuesday, the step line, the black line, had crossed from the left side of blue and climbing to the right side. So I said, well, we know what that means. Price is going to attempt to pull back to the BBC. That's the green line. Bull, bear, cross. Price is below it. We're bearish and anticipate lower prices. Above it, higher prices. Below it, lower. Above it, higher. Okay. Now, we talked for the last 2 weeks about the fact that when price hit this 38% fib extension, which was aligned with the daily BBC, that we expected a very good bounce. And we got a whopper of a bounce. My big question, is this a bull trap? Okay. Now the Friday high 2 weeks ago was 44.93.75. Today's high so far is 44.87.50. If we take out this high by a point or a couple of points and then start to sell off, then I'm going to go with the bull trap scenario. If we trade through this swing high and then hold it on a pullback on the smaller time frame, then we very well may continue north to our highest weekly trading zone, or the ES. The reason we look at the daily chart first is because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It has to do with account size. Most major institutions have accounts in the hundreds of millions, billions, and in the case of BlackRock, $10.5 trillion under management. When they place trades, that moves price. When you and I place a trade, we have an opportunity to make money, but our trades don't move price. So whatever market you trade, it may not be the S&P, maybe you trade gold, silver, maybe you trade Walmart or Amazon, maybe you trade Bitcoin or the British pound or the spider. Doesn't matter. Price flows the same across all markets and all time frames. So whatever market you do trade, just spend 2 minutes with the daily chart identifying where major areas of resistance are and where major areas of support are. Okay? Now, if you're just looking at a 30-minute chart, or if you're just looking at a range chart, you have no clue that the high put in 2 weeks ago today, how important and how significant that is. Imagine being 1 point away from this very important high, and you go long. You might get lucky and price just rips through it, but the highest probability is that price, if it reaches that high, it's going to find resistance. Now, it may pull back and then on a second or third attempt, plow through it. We monitor that on our smaller time frames. So, just remember, our indicators and strategy, they're not designed to outsmart the institutions or beat the market. The goal of our strategy and indicators is to help you clearly see what the deep pockets are doing, the ones who actually move price. Because if you can simply do what they're doing long enough to get your goal for the day, well, that's all you need. No crying about, oh, look at all this money I left on the table. Never have remorse over what you didn't get. Just be grateful for what you did get. And when you receive the blueprint, the 24/20 blueprint as a member, it's going to walk you through writing your business plan, your trading plan, and it's going to put you in demo until you put together 10 consecutive days in a row before you start trading real money. That only makes sense because when you first sign up, you have access to every resource, but you haven't had time yet to learn the strategy and learn how to properly read the indicators. Once you put together those 10 consecutive days in a row, then the blueprint will give you the green light to go live with one contract. 2 points in the S&P is worth $100 per contract traded. But when the blueprint says it's time to add contract number 2, well, those same 2 points are now worth $200. At 5 contracts, $500. At 10 contracts, $1,000. But you gotta walk, you gotta crawl before you walk, before you run. Okay? So important to remember that. Just because you sold your business and you got a nice nest egg, just don't come into the market with both guns blazing. Okay? Unless you just want to throw away your money. Because that's what will happen if you don't take the time to show up, do the work, learn the strategy, and then follow that blueprint. On the ES, the vertical line separates today, Friday, from Thursday, from Wednesday. And this candle right here is where we opened. The Friday session began with this candle last night at 6 p.m. Eastern. Okay. Now, we knew we had an obstacle overhead, the weekly zone. When price moves up to a weekly zone, we expect resistance. And that's what we got. We spiked it. But now the zone is 4440/4441. Okay. So again, we bumped our head on the ceiling, and we bumped our head on the zone, and then we pulled back to the BBC. The pullback holds more often than it doesn't. This is a beautiful example. So then we get back above the weekly zone, and from 44.42 to 44 would have given you your goal for the day. But if you were in on this 30-minute candle, this chart was giving you no reason to get out of the trade. Now, if your trading plan says I'm going to get my goal for the day, put the mouse away. And that's what we recommend. Fine. But if you've decided to do things differently, okay, and you want to stay in a trade, well, you stay in the trade until this chart tells you you should head for the exit. Okay. Now we've got a double top up here. And is this going to become a triple top? Or will this be the move? If we stall out right here, the fact that the step line has crossed from the left side to the right side of blue and climbing, there's a good probability price may pull all the way back to the BBC. So what happens here in the next few minutes is really quite important. See, we had a perfect stack on the way up. Price, step line, blue and climbing, BBC. But that dynamic has changed because price stalled out at 44.87. 44.87 half. Okay. So would I go long right now? No. Not until these highs are cleared. We still have one more zone overhead. Okay. Keep that in mind, but make sure not only do we get above here and hold it on a pullback, but you also want to make sure that you get above here. See, you can't see this on the 30-minute chart. All alerts, both concierge and logic, are based on the 30-minute chart. Nothing magic about a 30-minute chart. It's just the time frame I've chosen to look for my windows of opportunity, and then I execute my trades on a 10-tick range chart. In the live training room, And when Michael comes on and we trade live on the TradingView platform, you'll see that he uses a 7-tick range to actually execute his trades. Either one's fine. You know, whatever fits your personality the best. All right. Now he'll be here in about 5 minutes, so let's see if we can get through the rest of these markets. ES Dow. The Dow opened above the BBC, never traded below it. So what did I say earlier? I said as long as price is above the BBC on the 30-minute chart, it's trying to get to the zone overhead and the target overhead. So we got to the zone. See, yesterday, resistance at the zone. Yesterday on the pullback, this was a huge red candle all the way down to the BBC. I'm sure people were getting short left and right. But those of us who understand this strategy and the indicators knew to expect support here. So this huge red candle, by the time the 30-minute candle closed, the only thing left touching the BBC was the wick. But then blue and climbing got directly above price and became resistance because it's usually on its way to turning into red and falling at that point, which represents resistance. So we overcame red and falling, but we had an obstacle right overhead. We pull back to the BBC again, pull back holes. So again, there's no reason to consider trading to this short target. Okay, so everything's above the 30-minute BBC. It's the same on every market. We hit the target with room to spare, and then we pull back to the BBC, and we catch another leg. But now we've been going sideways for 1, 2, 3, 4, 5, basically 6 30-minute candles. Notice how the step line, remember, perfect stack, step line has now crossed. So, with blue and climbing directly above price, that now represents potential resistance. So if price gets below the step line and below these lows here, we can trade it down to that low, and then at the BBC we would expect support. Of course, buyers can come in and still drive this thing higher. Okay, you have to embrace all possibilities. Historically, U.S. markets rally into a U.S. holiday weekend. But remember, the holiday isn't until Tuesday. So make sure this high gets taken out before you start trading long. And watch for the pullback, if that's how it turns out. On the Russell, same thing. We never traded below the BBC, so we were only thinking of the long target. But we had red and falling, and we had red and falling, and then we finally broke above red and falling, which turned red and falling into blue and climbing. This candle opened at 1901.6. Let's just call it 1902 to be conservative. That's a 4-point move up to the target. At $50 a point, that's $200 per contract traded. So we got a leg, a retracement, a leg, and a retracement, and you'll notice that the pullback held, and then it held again, okay? And here we go. We just took out this swing high, but we only took it out. This high was 1915.10, 1916.40. That, to me, unless this candle continues higher and holds this area on a pullback, that's bearish, okay? And by bearish, I simply mean a move back to the BBC. And if we take out the BBC and this low, and these lows, well, then we got a beautiful window of opportunity down here to the short target. In Q. Here's where the market opened. We had blue and climbing. There's the bullish cross where blue and climbing gets above the BBC. And we ran right up to the target. Even if you entered on the open of this candle, that would have been 15,128. We'll call it 15,130. Okay, that's $200 per contract traded right there. We pull back to the BBC, and bang, we hit the target again. Then we pull back to the BBC, and bang, we hit the target again. Then we trade through this zone. Now, only 3 things happen at a weekly zone. Consolidation 70% of the time, rejection 20% of the time. That's this. See, price actually went through the zone, but when the 30-minute candle closed, the only thing left touching the zone was the wick. That's rejection. This is the slice. I slice through the zone on the 30-minute chart like it's not even there. Typically, what will happen is price will retrace to the zone it sliced through and then continue in the direction of the slice. So this is a bit unusual, but it does happen on occasion. So we run up to the zone where we expect resistance. 1, 2, 3. Now this is the 4th 30-minute candle trying to break through that zone, but we've got a high, a lower high, and a lower high. So how this 30-minute candle closes will be extremely important. And I'm sure you've noticed the step line is now crossed, blue and climbing. Let's go to crude oil. Here's where we opened. Got a nice little move up here. Plenty of room to get your goal for the day. Pull back to the BBC, the pullback holds. Then up we go to the zone, which is a potential obstacle. We consolidated, and then we reached right up to the target. Pull back to the BBC, hit the target, pull back to the zone in the BBC, and look where the market found resistance. These zones were published Monday morning at 6:15 a.m. Eastern. Published the zone since December 14th of 2009. Is that you, Michael?
That is me.
Okay, guys. I was going to try to get through all of these before Garrett comes on, but if you stick around after we talk to Garrett, I will pick up with gold because we still need to look at gold, silver, and the euro. So with that, Michael is going to now give us a recap of what happened in the live training room. Then we'll go live on the TradingView platform for 30 minutes. And then friend, co-host, sidekick, Wall Street legend, Mr. Garrett Jones will join us at approximately 1:30 p.m. Eastern. That would be 90 minutes into the broadcast. Looks good.
All right. All right. Let me put that up here. Here we go. Happy Friday, everyone. Good afternoon. Today is Friday, the final day of June, the final day of the first half of the year, the final day of the second quarter of the year, and the final day of the week. All right. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. Right here it says sign up for your free training. 9:30 to 11:30. If you click on that, all right, you're going to be sent all the information you need to get into the room in the morning. All right, in the morning. I still got to change this for today. But you're going to be sent all the information you need to get into the room in the morning. Reminder, next week we have a holiday on Tuesday only. All right, Tuesday only. That's the only day that's going to be affected by the holiday. Sunday, Monday, Wednesday, Thursday, Friday, all the same. If you're going to take the free trial, you should click on the trading platforms and give us all the information we need to make sure that you have your trading platform running in front of you. You should also look at the trade rules so you understand some of the information that I'm going to be talking about when you actually get into the trial. If you click on the setup video right here, it's a minute, it's 11-minute video that goes through some of the stuff. If you look on videos right here, if you watch the videos in here, you'll see a lot of the stuff that we're going to be using and going through in here, the explanations about the new indicators and, well, new, quote unquote, not really new, just how to use and what to expect out of the indicators. All right. And so it'd be good for you to just go in there. If you're going to take the trial, take a look at all that stuff before you actually get into the trial. All right, so the spreadsheet, we had a pretty good day today. Hang on, that is popping up on the wrong screen. That means I have something in the wrong place. So I will just close that all together. There. Okay. All right, so if you are going to look at the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the final day of June 2023, and today we made 15 ticks in the NQ, 29 ticks in the Russell, 22 ticks in gold, and 8 ticks on the ES. That put us up $540 a contract, and today it took 18 minutes and 4 trades to get to the goal for the day. At that point, we're up 600, and we took a total of 18 trades in total. All right, so we're going to end the month of June with $8,602. That is with one contract for the morning session. Now, the morning session is not 2 hours of trading anymore. It's usually 1 hour of trading, maybe a little more, maybe a little less. But we're averaging $409 in that session, okay, with one contract. On the year, we've gotten our goal in 121 out of 124 days, and we've gotten to $58,409 with one contract on the year. So at this rate, if we continue at this rate, we'll end the year with $116,000 with one contract, right? Which isn't bad. And if you keep working your way up with the number of contracts by the end of the year, the overall total is going to be a very big number. Right now, working away up with contracts, just doing what we did in the room, if you did everything exactly like I did, you'd be at 204,000 so far in the year, right? And that number is just going to get bigger and bigger as we add more contracts. It's going to grow faster and faster. Anyway, on the year, 124th day, we averaged $471 per contract per morning session, right? If you were to quit trading when you get your goal for the day and you had one contract per month, then this year you would have only had to work 37.25 hours, and you would have averaged $1,684 per hour for those 37.25 hours. Right? It's a pretty good hourly rate. Now, let's get into what we did do and what we didn't. We had some nice trades here on the NQ during the break. But what we did do, let's get into it. On the gold, we didn't have that many trades today, just a couple it looks like, and we're plus 8 ticks. Actually, something is wrong here, and it looks like, oh, that's the ES. Okay, on the gold, we were plus 22 ticks. We had plus 10 and a plus 12. Right, there was something wrong. I was looking at the ES totals. We had a plus 10 on the first trade and a plus 12 on the second trade, and that put us at plus 22 overall. There wasn't a lot of trading to be done after that. There's one trade here that we could have taken, and then it didn't give us a follow-up trade. Then it got all choppy through here, and it gave a little bit of a couple of trades over here. This was a ribbon trade you could have taken before the arrow right here. Right now, it didn't pull out of the oversold while it bounced off the ribbon, so you didn't get the green arrow on that, and you didn't get a green arrow on this one because it wasn't coming off the ribbon. But this is a valid trade right here, this Dragonfly Doji. That's another thing I'll just point out to you. If you get a Dragonfly Doji where there should be a trade entry, that's a really high probability trade. Okay, or a Gravestone Doji where there should be a trade entry, that's a really high probability trade. Dragonfly Doji means the open and closer at the top, and a Gravestone means the open and closer at the bottom. Okay. All right, moving on. That was gold. We are now in the Russell. Now we had quite a few trades here in the Russell. We had more trades than anywhere else, it looks like. We started out. All right. Here we had a break even on the very first trade, a break even on the second trade. And then we finally started to make some ground with the Russell. We had just a little bit of ground. We had a +1. Then we had another +1 to get us to +2. Then we had a +7 to get us to +9. Then we had a +10 to get us to +19. Then we had a +1 to get us to 20. And then we had a +9 to get us to 29. Right? Then we had a break even right there. And then into the break. During the break, we had this nice move up right here, but the only trade we had for that would have been right here. We had this green arrow right here. Of course, you could have taken that if you wanted to, and it put in a higher swing, so you could have taken a ribbon trade right here. So we had 2 opportunities to get into that. Right. Other than that, it wasn't until way up here you could have taken this black arrow for a little bit of profit, and this green arrow is still working right now. It didn't put in a higher swing here, so I wouldn't have taken a green arrow here. I would have been looking for the higher swing there, but there was no green arrow. That is the Russell. The ES now. Oops. I guess I went right by the whole ES. The whole day on the ES was not too much, but it was just a long run right here, starting out at 8 o'clock this morning. Just long trade, 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 long trade. This is the one we finally got on the ES. We picked up 8 ticks on that. Long trade, break even trade. Just a whole bunch of long trades there when it was moving up. Then we get into the break, and during the break, it looks like there was one short here, and I wouldn't have done either one of these because I would have been looking for a deeper pullback to the ribbon. But that would have been a profitable one, and that would have been a break-even one had I done that. All right. That was the ES. Now the NQ. Let's see the NQ. Crunch it up a little bit, not too much. All right, we had a few trades on the NQ. We ended up, it took us a long time to get anywhere with the NQ, and we did have a stop out in there today too. All right, so our first trade in here on the NQ was a break even, I think. No, okay, our first trade there was a +1. All right, our first trade right here was a +1 tick. And then we had a break even, and then moving along, in here, we had, after the +1 and the break even, we had a 30 tick trade right here. It got us to 31. Then we had another break even. Then we had a stop out that brought us down to 11. That's funny. We had a, I thought I had shut that off, and it just came right back up. We had a stop out here that went, that brought us back down to 11, and then we had a +4 right there that got us to 15. Then we get into the break, and you can see there were some nice trades in here. There. That one would have stopped you out. That one would have given you profit. Depends which one you took. And there. There is a feature that we have now. I just want to point it out to everyone who's looking right now. If you go in here, the green arrows are the highest probability trade, right? So you just click this green only button, and it's going to get rid of all the black arrows. So you only have the green arrows, the highest probability trades. Okay, that is a new feature. And you can see the green arrows are doing pretty well here if you get into them. And for every green arrow that you get, what you anticipate is that it's going to get at least to the prior swing high or low that got you into the trade. Right? So if you take a green arrow, you put your stop on, stop up here, but this is going to be 10 ticks. You put your target down here. That's what you expect. Okay, and this one, you put your stop on up here, you put your target down here. It takes a while, but it got down there. This one, you put your stop on up here, you put your target down there. It took a while, but it got down there. And as it's moving down there, you learn through the training, you'll learn how to look for more targets as it's moving down, so you can extend your target further down as the price is moving within the DOM. Let me see if I have any questions. No questions yet. Okay, so you can see during the break, there were some great trades in here on the NQ. And there's another one there, another one there, and that's the last one that we had. This pull out of the oversold right here, because I don't have the black arrows on, it would have produced a black arrow right here. Okay, you would have had a black arrow. You would have had a couple more black arrows in here if we had the black arrows on. But because I shut them off, I'll turn them back on right now. You'll be able to see. Ding, ding, black arrows. See that? All right, well, it is 1 o'clock, and at 1 o'clock, I have to get into the live stream. So let me jump into that right now. Hopefully, I'm not too late getting over there. I think I might be. Go to community, live streams, my posts, trade ideas, educational items, video ideas, client scripts, streams. All right, I need to go to my streams, community, live streams. think I can go in here and get it. I go here and go down to here. I think it'll be right in here. This one. Nope, it gave me the other guy's thing. All right, so I don't have the stream. I don't have the link to get into the live stream right now. If somebody could post that somewhere for me, then I would be able to get into it. Let me go back over here. I totally forgotten to go into that today. Let me see if I have it going on another browser. It's not on that one. Give me just a second here. It's not on that one. And it's not on this one. So I don't know how to get to my live stream. Let's see. If I click on refresh right now. Oh, here it is. Jermaine's got it. Thank you. Thank you for that. All right. So in here, now if I click refresh on this, click that, and that, and that. There we go, and shut that off. There we go. And now click on this and say start stream. Then we'll be able to start the stream up. Okay. I try to do that every day so that I don't run into that issue, but some days I get going. All right, here we go. So the live stream. Now, what I was to finish up on everything that I was saying a few minutes ago in the other stream. To take the free trial with us, just go here to mytradingiq.com, sign up for the free trial right here. Right, if you're gonna sign up for the free trial, go up here, click on trading platforms, give us the information we need to get the desktop running in front of you. If that takes more than 5 minutes, contact us and we will do it with you, for you. Take a look at the trade rules page. Those are the rules that we trade by. And watch these videos. These are videos of me doing this stuff that you're going to be seeing me do right now. Okay. All right. So getting back into it right here. The gold is now putting in a little bit of a higher swing. It's not quite there yet. The Russell had a green arrow trade from back here that hasn't put in a higher swing. The ES is starting to pull back, and the NQ is pulling back. It's oversold, and it's really deep right here. If it gives us an up close, there's a chance we'll have a trade, but I don't think we're going to. All right, so for anybody that's in here in the live stream right now, I know I got on just a little bit late on that one because I couldn't find the link to it. There, that disqualified long trades on the NQ, so we're not going to have anything there. The Russell is failing, the NQ is failing, and the ES is starting to pull back toward the ribbon. So, yeah, that's what we're looking for right now. Okay, we're looking for that pullback over there. That's the gold now is possible. This possible trade. All right, just put in a higher swing that could possibly give us a trade. But so the ES and the gold are the only two that are possibly going to give us a trade right now. Why? Well, because not in there, not in there, over here in the trade rules. All trades must come after a higher or lower swing pivot. Okay. The only one having a higher pivot is this one and this one right now. Right. So yeah, that's what we are waiting for in there. Okay, we need the pullback there and the pullback there. And while we wait, let me just check and see all this in here. Okay, while we wait, we'll go over the rules here. All right, what we're waiting for is step one is all trades must come after a higher or lower swing. So both of these are a higher swing, right? And then all trades must be in the long-term trend direction. So long-term trend is bullish, long-term trend is bullish. See, the outer bands on the top and bottom are exactly the same. And they just show you what the long-term trend is. Right now it's bullish because it's spread out and going up, spread out and going up. Right. over here on the Russell, it needs to put in a higher swing to continue that trend. Over here on the NQ, it needs the same thing to continue that trend. You see how those are falling apart. So that is, according to the rules, step 1 and 2. Now, we're going to be looking for one of these two trade entry types. It's going to be a long trade without the slingshot or a long trade with the slingshot. Now, if we look at this right now, this is already oversold. So there's a good possibility that if it does pull back, it's going to give us a trade with the slingshot. Now, if it hits the ribbon and it has a slingshot, it'll be a green arrow. This one did not hit the ribbon, okay? So it's got the black arrow. Now, this is a very shallow pullback. There's a couple of things wrong with this, in my opinion. When you have a trend change like this, the long-term direction changes from bearish to bullish. I like to have a deep pullback. All right, that's one thing. The next thing is that the swing high is right here at 90.50. So if you entered right here at say 89, it's okay if you entered exactly at 89, but if you had slippage and you ended up getting in at 89.5 for whatever reason, and you don't have a lot of room to get your stop to break even before the swing high. Okay. On Indian stock, give me a symbol there, Kushal. Exit, that's a symbol. Okay, I will do that symbol here on the NQ. Okay. EXIDEND. Just go to all on that. Excite Industries. Is this it right here? Okay. All right. Well, this is what it looks like on a 16 range. Now, you wouldn't be looking for it on a 16 range. I'm going to blow this up because we don't have trades anywhere else right now. You wouldn't be looking at it on the 16 range with this kind of, I don't know what kind of volume you have on this. It doesn't look like you have much volume at all on this. You'd be looking at it on a larger time frame, but just on a 16 range right here, you can see how it moves. Now, I don't know exactly how this works, but if you look on the 50 range now, in US dollars, each bar would be 50 cents in US dollars. Okay, each bar would be 50 ticks or 50 cents, right? So the green arrows, if you're just looking at the green arrows bouncing off the ribbon with everything else going for it, they're doing really well here with your stock. What it's suggesting right now, it's put in a higher swing. If we crunch it up some and we try to look left a little bit, yeah, there's not a lot over there on the left. So it's already got a higher swing in place. It's suggesting it's going to pull back. And the pullback will probably be down toward the ribbon right here. You want the pullback to be above this. Okay. And it looks like it's probably going to pull back down to here to 33.45, down in that area right there. Okay. That's what it's suggesting right now. Okay. Does that make sense? So you have a higher swing right here. You had the green arrow. The green arrow back here is suggesting to get in down here at 31.45. It ran up from there to 38.75, and now it's dropping back down. Okay. Stuff works on everything. You just have to find. You have to find the right time frame to look at, depending on the volatility and the price value. The dollar value. But if you have any other stocks you want to look at, this is on the Indian Stock Exchange, apparently. So we do, and what you would be waiting for with the green arrow, when you came off the higher swing right here, the rules are clear. The trade rules, they don't say only for futures, right? I give all this information for futures because we trade futures primarily, but the way you would pick the sensitivity setting for this market, for instance, for your market that you chose right here, you would look at it with no trade zone on, okay? You put the no trade zone on like this, Go to style, you throw your no trade zone on there. No trade zone. And now you want the no trade zone to populate where it's flat, like this. You don't want to be trading where the market is flat. Okay, so the no trade zone looks like it's just right for this market. 0.35 is what the no trade zone is set to by default. And this is, 0.35 maybe a little aggressive. It hits all this flat spot, but this is kind of bullish right here where it's showing the no trade zone. But the one thing that no trade zone is looking at, it's looking at the difference in change between here and here. It's not looking at that you actually have a separation. It's looking at the difference in change, and there's not a lot of difference in change. That's why it's showing it there. So right here where it's all flat, that's where it's supposed to show it. But you can change that sensitivity setting. It's right in here. If you find that it's too aggressive or too conservative, to make it less conservative, you'd make that a smaller number. You'll see the no trade zone is going to diminish. Let's see. Or to make it more aggressive, make it a bigger number. You're going to have a bigger no trade zone and get some of the arrows. You're not going to get arrows in a no trade zone. Okay, so that is the setting that you figure out and choose. I'll help you with it. If you need help with it, of course, I'll help you figure that out. But that is a feature that you can adjust to best suit whatever instrument you're trading in whatever time frame. Okay. All right, so now it's 1:12. We still don't have a single trade. Nothing set up yet. Now, next week is a holiday week, but the holiday is not on Monday. As far as the markets go, the only day that's going to be affected is Tuesday, but I suspect that there's going to be a slowdown in the markets between now and Tuesday. All right. Any other questions? Anyone? Anybody want to see anything else? I mean, this right here was the NQ, so the NQ is probably giving us a trade here. So I'm just going to bump it back to the NQ, the futures. Okay, and I'll put it back on the 16 range for the NQ. And it's not really giving us a trade. We need to come off a higher swing, and we're not. Okay, but if you want to see, anybody wants to see any other thing. If you have not taken a free trial and you want to take a free trial with us, go to mytradingiq.com right here. This is how you take the free trial. Just click on that. With the free trial, the only way to get these indicators is to sign up for the free trial. All right. So again, go to mytradingiq.com, click this button right here, sign up for the free trial. I gotta fix that button. I guess I can go fix it right now while we're talking about it. And then the free trial will actually bring you to the right thing. We'll fix it right now. Paste. Done. Okay, let me scroll down here a little bit. Do the next one. All the way down here, click on that. And paste. Done. Publish, save and publish. Okay, hang on a second. So now, once it says it's published, we'll refresh my page. There it is. Now refresh my page, and when you click on this right here, we don't ask for any credit card or anything like that. Just sign up for the free trial right here, okay? And we'll get you all the information you need to get into the room and to activate your indicators. All right, for TradingView, you just need to give us your TradingView username to activate the indicators. Okay. All right, so we'll go back in here. Again, that's how you take the free trial. You just go here to mytradingiq.com, click on this button right here. Sign up for the trial. Right, I don't know I have that right. Close that. Back here. Guess I don't need that either. All right, so we still don't have a trade here. We want the ES to pull back deeper after a trend change. We want to pull back down and test the ribbon. Right, the NQ is just going flat and sideways. If anybody wants to see any other symbols, all you have to do is tell me what symbol you want to look at. I'll be happy to go look at it. I mean, I can go look at some random stuff. Like the ES was huge today, so let's go look at the SPY. a look at that. SPY. Go to all on that, and it's the ETF. Let's see how that did today. Now, this does not have the, if I go in here and I do the no trade zone, it's gonna have the whole thing blanked out. Okay, so in something like this, we'd have to come and adjust the sensitivity setting. And in here, if you go to trade rules up here, does it say anything for the SPY? It does not. Okay, so 0.35 is way too conservative. So let's try 0.01 and see how that is. Okay, 0.01 is pretty good. You want it to be there when it's flat. Okay, so we'll just go with 0.01 on that. You see for the SPY, it was giving indications, well, in here while it was going up, it was giving indications. We had this huge gap up right here from yesterday to this morning. But it's been up since then. Long trade, long trade, long trade. And then it went short. And this one here would have stopped you out, and that would have stopped you out. But by the time you got up to that, you had all these other trades here, so there's no need to keep trading all day. But we made some money on that one, and it gave a long right here. That would have just stopped you out too. Now that's using this time frame with a 16 range. With this this dollar amount, you probably wouldn't use a 16 range. You'd use a 50 or 100 for that dollar amount. Okay, do something like this. This is what you'd be doing, right? Something like this, where you'd been long from yesterday, long from a couple days ago. That's the SPY. Now, if you bump it down to 50 cents per bar, and you would have been long here this morning once, and you could have been long again right here, but it didn't put in a higher swing after the first one. Okay, but that's what that looks like. Go back to the NQ on this, and if anybody else wants to see anything, I'm happy to show it. It's 1:18. We only have 12 minutes left in here. We don't have a middle trade. See, the Russell needed to put in a higher swing for me to want to take a trade. Right here, it needs to put in a higher swing, and it hasn't done that. So the markets have really slowed down here right now, today. Yeah, I just noticed that somebody had started to follow us. If you are not following us and you want to get notified when we do things like this, just follow us with like us or follow us, however you have to do that. I'm not even sure how to do it, but like us or follow us through TradingView. Click the follow button. Where is the follow button? Isn't that what we were trying to do last night? Okay, oh, in the live stream. Okay. This is follow. Oh, perfect. Well, that's how you do it. Just click that follow button. Just click that follow button, and you'll be able to follow us. If I log on with another ID, I do have another ID that I paid, so I should log on with that one and see what it looks like. Actually, I think I bought a year's worth on that other ID. So, still waiting for a trade setup, guys. I can't manufacture these; they have to happen. Right? When there's no trades, there's no trades. So, if anybody has any questions about anything, anybody wants to see anything, I'm happy to go over it for you. I did the SPY. We looked at that one stock on the Indian Stock Exchange, which was a first for me. But you see the stuff works over there too. It doesn't matter what it is. It's all based upon price action. Okay, it's all based upon price action. Ah, there it is. I see it, Dwayne. There is a follow button underneath there. All right, so that's pretty easy. How much time did we spend looking for that last night? And that was also the like button with the indicators. We're looking for that too. Yeah. I'll have to try to find that too. Good. After we talk with Garrett. All right. It is now 1:20. I am looking for more questions if anybody has any. And I have now edited the site, so that is good. This is what I was looking for over here. Okay. So we're back on the NQ, and right now we want the NQ to pull down pretty deep right here to get down into the ribbon and give us a bounce. When it does that, we want to see this black line get down into the oversold. Right, the rules are clear. Right here, we'd be looking for a long trade with the slingshot. Okay, so the black line in the ribbon must be on the bottom and in the green or silver, and the lead black line in the slingshot must cross above the oversold level. So we're going to get that down into the oversold and this down into the ribbon. That's what I'd like to see. Now, I'd be happy if this just got down to the ribbon or this just got down to the oversold. Either one would be a trigger, or at least initiate the trigger for a trade. Okay, but what we have right now is nothing. So, so we're waiting right now. And I don't see any more questions coming in, so let's go look at something else. Let's look at it on the ES, because ES is not moving fast at all. Let's look at Tesla. Okay. Now Tesla would look at on a 50 tick range, okay, because it's priced $200, and we have to adjust our sensitivity with this. I'm trying 0.1. That's pretty good. So with Tesla, you can see throughout the day today so far, we've had a whole bunch of green arrows in here. Now, again, you wouldn't want to take a green arrow after you have a higher swing. And the black arrows are all okay too. But again, you only want to take a black arrow after you have a higher swing. So you have this one right here that would have encompassed that one. And this green arrow that would have been this one also. As you get the arrow, you anticipate that it's going to do what it always does, that things are going to do what they always do, and that price is going to continue moving like it always does. Like over here, up, down, black arrow entry, up, down, green arrow entry, up, down, no entry, up, down, black arrow entry, up, down, green arrow entry, up, no higher swing, so no entry right here. Okay, then nothing until all the way over here, higher swing, down, green arrow entry, stop out, then down, up, and right here, it would have been a trade. This would have stopped you out too. So you would have had a stop out going long and a stop out going short. Now that happens at the end of trends sometimes, where it's just enough to trigger a trade in each direction. Usually what you get is enough on the end of the trend right here to bump your stop to break even, and then it won't continue the trend. So you won't get a full stop out there. You get a break even stop out, and then it may or may not trigger a trend on this side, trigger a trade on this side. Yes. Yeah. So it happens, but if you got all that profit from all these other ones on the way up there, you probably shouldn't have been trading here anyway. That's right here, though. I probably wouldn't have taken this because the long-term direction was completely flat. You know, that's something we might have made it a little more conservative, the sensitivity. I wouldn't have taken that for sure. With the long-term direction flat like that, I would have skipped that. And I would have taken this, and that would have stopped me out. But that's Tesla. You can look at something else. Google's, what's that priced at right now? It's about the same. So I'm looking at today. Gave one long trade here that did not put in a higher swing. And this is today. I'm sorry, I didn't give anything today. That was the other day, yesterday. It didn't give anything today, and that's Google. How about Apple? Apple today. This is all today. Is this one today? Nope, just this black. That's all we had today. And I'd anticipated getting up through 93.21. Okay. Yeah. Let's see, we only have about 3.5 minutes left in here, guys. We don't have a single trade today yet that we've done here. I mean, this morning, we can go through this morning's results, I suppose. This morning, we ended up with 15 ticks on the NQ, 29 ticks on the Russell, 22 ticks in gold, and 8 ticks on the ES. So we're up 540 a contract this morning. It took 18 minutes and 4 trades to get to $600 this morning. We took a total of 18 trades in the room this morning. Now, the free trial that you would be signing up for, if you go here to mytradingview.com, you sign up for this free trial. It's 9:30 to 11:30 every business day. So every business day, we're in there every morning doing the trading. And that's what we ended up with today, right? This is what we ended up with, one contract for that session on the month, $8,602 on the month with one contract for those 2 hours of trading. This is really where you want to be, consistently profitable, getting your goal for the day every day, and then quit trading. If you did that, you would only had to work 37.25 hours so far this year. We're halfway through the year, and you would only had to work like a week for the whole year. And you would have averaged $1,684 per hour while you were working that week. Yeah. So that is what we have going on. I don't see anybody asking any questions in here. So we'll hope for trades. We don't have any trades yet. On the ES, we changed this to the Apple. But on the ES, I'm sure it's not doing anything. The NQ is not moving. None of these other ones are going to be moving either. The NQ is the most volatile out of all these markets. So again, if you've not taken a free trial, go here to mytradingview.com, sign up for the free trial right here. If you trade equities, or you trade ETFs, or you trade Forex, or you trade cryptos, take the free trial so you can have access to the indicators, and then get in touch with us. All right, and we'll help you adjust so you can be looking at what you need to be looking at for the market that you want to trade. Right, the rules are going to be the same. See in here, it doesn't. If you look at the trade rules, it doesn't specify what market. And this is for different markets. If you're going to be trading any of these, but you don't have to trade any of those. That's what we would have to help you with. But the rules are always the same. You're going to be looking for the same type of entry. Okay, there's no value in there or a specific market in there. Okay, and down here, these are all for the different tick ranges, different size range bars. But that stuff is all adjustable. Not here, but if you use different ones, larger range bars or like minute bars or something like that, all that is stuff that will still work. You just have to know how to make it work for whatever market you're looking at. Okay. So NG1, trend or prediction, natural gas, sure. Natural gas. I'll do it over here on the Russell. Okay, do NG1. You probably want to see the NYMEX one right here. Right? Okay, so this is what it looks like right now. And this is on a 7 range. We're almost getting a trade over here on the gold. But we'll just look at it quickly like this on the 7 range. Now for natural gas, we'll have to check the no trade zone on that so we can make the adjustments that we need to make for that. Okay, we'll turn the no trade zone on. It's got everything blocked out. So for natural gas, given the decimal point, probably have to go out that far. There we go. All right, so the natural gas gave a long trade right back here at 13:07, so 20 minutes ago. And it should exceed this prior swing high right here is what it should have done. It's pulled all the way back, so it's not going to have a trade right here again because it didn't exceed that prior swing high. It may trigger an arrow as we come out of the oversold right here. It may trigger an arrow. The long-term direction is still bullish. but I wouldn't take this one. If you took this one, you should have taken profit on this one, locked in some profit. It should have gone up above this level right here, but it seems to be failing at that level. So I would not take this right here on the long side. I would wait to see what it's going to do at this point. If you took this one, you should add some profit in that. And you'd have to wait now. The NQ actually just gave us a trade right there, and the gold is almost setting up a trade over here too. Okay. Now again on the NQ, I wanted it to pull all the way back down and hit the ribbon, just like I wanted to see on the ES. I wanted to pull back and hit the ribbon after the trend change. Okay, you see how this is failing right here? It failed to put in a higher swing right here. Now let me explain that to you. Okay, since you asked, let me explain that to you. Yeah, right there, Dwayne just did. But the way that the markets are always running, you know, they go up and down, up and down, and up and down. And then they go, the pullback is a little deeper. And every time it goes up, you'll note that it exceeds the prior swing high. But right here, where it doesn't exceed the prior swing high like this, then you got to watch and see if it exceeds that prior swing low like it's just about to do. Because if it exceeds the prior swing low right here, instead of putting in the swing high, well, then your trend just changed. Okay, so right there. That's what we're dealing with right here. We went up, we pulled back, we went up. This is what it had to go through. Let me undo all these drawing objects. Okay, this is what it had to go through to continue the trend. This is what it can't go below. All right, so if it goes below there, it stops the trend. If it doesn't go above there, it doesn't continue the trend. So if it gets jammed up in here in this range, then you just don't want to trade when it's in there, right? When it's stuffed in here, you want to wait till it gets out, down like this, and you start taking shorts, or wait till it finishes and goes up and start taking longs. Okay, but we did have this trade right here. That was a great trade, great opportunity to get in right there and lock in some profit with a target, initial target right here at the swing high, and then future targets beyond that. Okay, oh, I just realized what time it is. Eesh. Sorry about that, everybody. I ran over just a little bit. All right, so thanks for asking the questions. If you have not taken a free trial with us and you want to take a free trial with us, then go here to mytradingiq.com. If you're going to go to mytradingiq.com and sign up for the free trial, you're on TradingView. You're in here because you're on TradingView. Give us your TradingView user ID, username. If you sign up for the free trial today, we will get all your information out to you today, and we'll get your indicators activated so you have them over the weekend. And you should watch these videos in here. We go through all the stuff in here with the videos, like everything that I just did in here today, and you'll see actual trades being triggered in here. How to manage a trade, all that stuff, the trade rules, and these are the trading platforms, right? TradingView is what we're working with right here. All the charts are on TradingView, so give us your TradingView username. All right. I guess we're going to wrap it up with that in here for today. The NQ did give a long trend here. I wanted to give a deeper pullback. I wanted a deeper pullback on both the ES and the NQ. The natural gas, I would not go long on the natural gas right now. I would wait for it to pull back up and give you a short trade. The long-term direction has to change here. The long-term direction is flat right now. So it's got to drop down more right in here. Right, it's got to drop down some more. And the prediction on that is at least this level down here is where it'll go down to. All right, if I look at that on a larger time frame, let me look at it on a larger time frame for a second. Here's our larger time frame stuff. Okay, so this is the Russell. I'll have to, hang on, let me make a new chart for the natural gas. Go add chart. Oops.
Garrett, I will open your mic here in a minute.
Okay, sorry, I ran over. I forgot Garrett's coming on right now. Sorry about that, Garrett.
No problem.
I'll wrap this up. I would think it's going to go down to this level, but you got to wait for the pullback. You got to wait for the long-term direction to change to bearish. Okay. We wrapped up the morning here with plus 15 on the NQ, plus 29 on the Russell, plus 22 on gold, plus 8 on the ES. And again, I told you how to take the free trial already. So with that, I'm going to wrap it up and pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain. As soon as I stop this stream. Okay, the stream is stopped. Here you go, Dwayne.
Okie doke. Recap of the morning session.
This morning it took 18 minutes and 4 trades to get to $600.
Good job.
Thank you.
Fantastic. All right, guys, we're going to bring Garrett on here in just a second. But first, I'm going to share with you our tweet of the day. Today's winner is Mr. Kyle Becker. And the tweet says, Joe Biden's former staffer, Erica Marsh, says the very racist quiet part out loud. Now, again, Joe Biden's former staffer. Her comment, today's Supreme Court decision is a direct attack on black people. No black person will be able to succeed in a merit-based system, which is exactly why affirmative action-based programs were needed. Today's decision is a travesty. Oh my God, have you ever heard such a racist statement in your life? No black person will be able to succeed in a merit-based system. She's very attractive, but I don't know what's going on inside that head. She even self-retweeted this soft bigotry of low expectations masterpiece. And it just goes on and on. Are you absolutely sure this isn't a parody? I think it's a parody. Kyle says, no, I sourced it. It really happened. And then he goes on to say, look, this isn't a personal attack on Erica Marsh. Everybody has their moments when they vent and they say things in a very blunt and coarse way. That being said, the tweet itself is emblematic of the problem in communication between the two sides in this cultural debate. That meaning, what is the nature of racism in America? So again, I wish Erica the best, and I'm only trying to shine a light on the problem using her tweet as an example. It's not an accusation that she is actually racist, which is why the tweet was held up as racist and not the person herself. We're all sincere here in our beliefs, and there is no ill will intended. But this is a serious problem that has to be resolved in our debates on the matter. Her account does not say parody. And somewhere down here. It should say. Where did I go? Must be a lot of tweets coming in. Somewhere down here it says nominated for tweet of the day. I don't know. But anyway.
You had already gone by it. It was up higher. You had
Oh,
gone
was
by
it
already.
up? Oh, I already went by it. Oh,
Yeah.
it was. Oh, I have to go back over here. Is that it?
Oh, you're right there.
Yeah, right here. This tweet has been nominated as a tweet of the day. Okay, so now that we've taken care of our tweet of the day, and remember, guys, we do a tweet of the day from the left side of the aisle, and then the next day we do a tweet of the day from the right side of the aisle. I think that tweet's from a humanitarian side of the aisle. Okay, Garrett's fidgeting. Garrett, I'll get your thing open. Just hang on. All right, Garrett, you got an open mic. I'll make you the presenter.
Great. Hi, Dwayne.
How you doing, buddy? All you got to do is accept. And I'm on a tight schedule too, so we got 20-30 minutes.
Let me see. Yeah, I'll just go through these kind of quickly. Can you see this okay?
Perfect.
This is the S&P cash chart. The S&P cash made a new high above this high today. I don't think the futures has so far. Maybe it has now. But what this is setting up for is that obviously we could go up to the upper channel here. Who knows where it's going to go? But look at the potential divergence set up down here. If we don't just take off and go to the moon, I don't know why we would, but in this market, nothing would surprise me. But you've got a divergent sell set up here. You've got seasonality, which says that right around the holiday and a little after is the ideal seasonal sell time. Whether it will be this year or not, who knows. But this is pretty important, and I don't have the. I'm sorry, I don't have the Bollinger Bands here. But back here, I believe this is May 4. Let me see. No, this is May 4. This is when we last hit the Bollinger Band on the bottom. And then it worked its way up and hit the top of the Bollinger Band here and hit it over here. So you've got a potential Bollinger Band top, a potential double top. That's what this would be. You've got a potential fifth wave, and you've got a potential divergence.
And you got a potential bull trap.
Yeah, and yeah, exactly. Yeah. So you've got a lot of things there that where the odds are, highly in your favor. Whether the people that are pulling the strings want that to happen right now or not is the other side of that equation. Your BlackRocks, your Blackstones, your Vanguards, etc., can make the market do whatever they want it to do because they've got the money to do that. So.
Right.
And if the Fed wants to help them out a little bit, who knows? So, price is king. And down here, this is another indicator. It's coming up where we're up here in pretty high levels.
I'm so glad you said that about price being king, because what I teach people is no matter what market or time frame you're trading in, the clock on the wall is always price.
Yeah.
And yes, you can use that in your book.
And this is the QQQs. Here's a remarkable trend line. This trend line's from the March low to the May low, and you hit on about 5 points. 1, 2, 3, 4, 5. So it's a great trend line. Parallel it off the high in between. That's what we're doing here. It goes back to this high back here. It hits this high here. It hits this high here, here, here. This is a great trend line. And it hits you. This one's got 5 hits. This one's probably got 8 or 10. And there it is again. That should supply some resistance to the upside. And here's your upper Bollinger Band. Last time you hit it here, currently over here. And this is the NASDAQ 100, the QQQs. So you're not having a confirmation either. Here's a non-confirmation. So if that whole, and you've got a massive divergence down here, the bottom of the chart. So once again, lots of stuff set up, lots of stuff that looks pretty good. Will it work? Who knows? Here is VIX, and VIX has here's a bottoms trend line. By the way, that goes back a ways. That's going to take you back to 2017 back here. So you're looking at 5 years. Mm-hmm. And look at these loans. What a trend line. Here's another trend line. You can't argue with this trend line. Nope. This is the lowest trend line.
Can't argue with the fact that it's been broken now.
Exactly. If you don't like it, that's one thing, but that's the trend line. That's how you draw that trend line. And the tops line, that's how you draw that one. Look what happened. We scared it a couple of times here, and oh boy, we're through now, and look where the price is. It's not up here, it's down here. And what's that done? Well, I pointed out before that you had in the S&P here, and again, this goes back to, I think that's the 2020, right. Here, let's do it that way. Here you have this giant ascending triangle, upward here, flat here, and you're breaking out of it. So generally, that's a really big deal, and it's hard to imagine when we've got recession and World War III and Civil War and God knows what else going on.
The
in
end
the
of
country.
affirmative action.
Yeah, I mean, unbelievable. Yeah, I heard your comment from that young lady. I would have thought, and I focused on exactly what there's 4 or 5 things you could have focused on there. I focused on exactly what you saw.
I
And
try to
that
be
is,
gentle.
no black person can succeed on a merit base. Excuse me, is that not the most? First of all, it's not true, and secondly, it's exceedingly racist. But again, who cares? It's the United States.
My
If we would,
namesake, little D, Dwayne, who's living with us from Uganda, when he saw this on the news last night, he was greatly offended by it. And
and rightly so.
he's not what they call a brown person. He's black. He's from Uganda. And he said, I want to get in based on my ability, not the color of my skin, because that's just disgusting. Well, brother, we've been fighting that battle for many years here in America. So,
and if everybody's so concerned about fairness, racial fairness, and affirmative action and things like that, they've been around for a long time. How come the NBA has got, I don't know what the numbers are, but it's 90% black players, and that's okay? Why wouldn't that? I can
right. Where's the racial diversity there?
Where's
That is a merit-based program they got going.
Yeah, and the argument is
there's even a movie, White Man Can't Jump.
Yeah, white men can't jump, and it's like if you want to say that, I guess that's okay. But yeah, there's certainly some things on the educational side that you can flip around and say the other way if you want to do it and be accurate. Although we're losing that edge monumentally. When everybody's brainwashed, it's a little tough. But anyway, this is a pretty if you look at this chart normally, you're going to say, boy, this is a new bull. This is what a new bull market looks like, because here, this is a big multi-year ascending triangle, and this is a breakdown of a multi-year line. We're getting a breakout. So this could say, well, gee, this market's got a long way to go. I have no idea. Here is my feeble, maybe it's not feeble, maybe that's premature, but here is my attempt at doing the Elliott wave on this. And this is coming off the October low. I don't know whether that's a wave 1 down or a wave 4. So it's probably one or the other. But you've got a 1, 2, 3, 4, 5 for an A wave. By the way, the C wave is now maxed the A wave in its distance. It's a little longer. And you've got an A, B, C here for a B wave. And then this looks pretty good. 1, 2, and then here's a little 1, 2, 3, 4, 5 for a 3 wave. And then your ABC for a 4, and then a 5. That's pretty clean. That's a 1. That's a 2. Who knows what this is? But it's probably a series of 1, 2, 1, 2s. It could be a 1, 2, 1, 2, 1, 2 here, and then 3, 4, 5. So
the all-time historic high for the ES S&P futures came in January of 2022. That month we put in a high at 48.08 and a quarter. That's using the continuous contract. However, we barely put in that new high, and then we had a red monthly candle, pulled all the way back to the BBC, bounced to the step line, came back down to the BBC, and so we now have a monthly high of 44.94. That's the Friday 2 weeks ago we've been talking about. And the all-time historic high is 48.08 and a quarter. Now that's futures. Garrett's showing you cash index. Okay.
Yeah, back where, yeah. Yeah. So this, again, this has got a little bit higher high. Now, this, by the way, this counts pretty nicely here if you just eyeball it. 1, 2, obviously a 3, a 4, and then a fifth wave wherever it goes, and you get a divergent sell signal with the fifth wave. What could happen here quite easily because of this here, this is an odd, I mean, you could go, 1, 2, 3, but the problem is you already got a 1, 2. So,
Right.
we're coming up with wave 1 that's very clear here in wave 2. So this is obviously part of a wave 3. And if it's a 1, 2, 1, 2, and then 1, 2, again, this can't be a 1, 2, 3, 4, 5 because this wave is the shortest, and you can't have that with a wave 3. So whatever this is here, this is a 3 of some kind, but it may not be the completion of this parentheses 3 close parentheses wave 3. This could maybe be finished here, or even with another 4 or 5 up here, and that would be 3, and then you get an ABC 4 and then a 5, which might take you over to here, which is the end of the month. These are Fibonacci extensions, time extensions. So I just threw those in out of and they go back in time, but it's just kind of interesting to see where the ending part of this is. So anyway, time will tell. In the old days, you used to be able to be pretty accurate on these things with pretty good high probability. Not so much anymore. This is monthly VIX, and I wanted to bring this up too, because again, this one here, I just cut it off, but it goes back to 2017. Now we are closer here than at any other time on this chart. So in the past 5 years, we're closer to hitting the lower monthly Bollinger Band on the VIX. So the implication for what it's worth is, who knows, again, this is a monthly chart. Could this take another couple of months to get through that line and then come back inside of it in August or October? Sure, it could, because it's monthly. But the point is, we're closer to this than we've been in at least the last 5 years. I think you've got to go back to 2014 to get to a closer point. And by the way, 2014 wasn't a major topic. So there's a lot of leeway here. One of the things that I brought up before in not only observations, but I think we talked about it 2 or 3 times ago, maybe longer, when we were talking about the article that came out that said that the hedge funds were heavily short, more short than at any other time percentage-wise, I believe is what the article said. And that article is 2 or 3 months ago. So they were looking to be short then. Now the market's gone up. For a while it went up, but it didn't go any higher, so the shorts were comfortable. Now we've gone higher. So clearly every short out there is uncomfortable. I don't care who you are. There's going to be levels of discomfort, from mildly discomfort if they just got short to if it was those guys back in the historical thing. And that's what I'm talking about 2 or 3 months ago. Those guys have got to be very uncomfortable. And after that was pointed out, about a month later, there was a record level of call buying. And I don't know why that was, but if I had to make a guess, I'd say these guys want to keep their positions, but it's a vis-a-vis game as far as performance, and they don't want to get murdered, and they're getting hit pretty hard. So I think they were the call buyers hedging their own hedge. So I don't, do I know that? No, but it's a fairly logical conclusion based on what's going on. And the question is, how many of these guys, and these are big hedge funds, are still short? And my guess is more than you think, more than you might think.
No, I still believe this is, we may go higher. We may take out the high of Friday 2 weeks ago, but I still think it's a bull trap.
I do too. I think we're going to get, even if this is going to be bullish till the end of the month or later, I think we've got, something like, it's hard to buy it.
Today is the end of the month. Maybe you're referring to the end of July.
Yeah. Yeah. Well, no, I'm sorry. I'm definitely referring to the end of July. Thank you. And yes, the seasonality is July 7th. Peter and Eliades and I did the work on that, which took a long, long time to do. We went back into the 1920s and did it on a monthly basis coming forward. So, we
invite him to come back on the show sometime in the near future.
I will. It might be fun for him to do it on Monday because he's got some trend lines and some stuff. Peter's been more bearish than me. The price and just what I was looking at, and I didn't have any signals to be bearish, so I haven't been bearish. Today's the first day I got bearish on this thing where I think we should have a correction. And even if it's just a 2 or maybe 2.5 day type of correction, which at this point is all I'm expecting. But if you get a fifth wave, a double top, a divergent sell, a Bollinger, all the things that we talked about, if that's what happens, then it's not unwise to expect a halfway decent correction and or a top, or both, so that's certainly in the cards. It's just that with what's happened in the market and the way it's happened, it makes one cautious because we realize that for whatever reason, this market wants to go up. Or
Michael Lahr in the question box just commented, NQ on track for best first half-year finish since 1983. That could be a warning sign in and of itself.
Yeah, it's hard to, that's a good point because it's hard to imagine the alternate to that would be, hey, look at the 4-year cycle. We just had, a year's ending in 2. Years ending in 2, you can't name a year that's got more major lows than years ending in 2. And we just had a low in October of 2002. And why are we even arguing about this? This should be, we should be early in this bull market phase. Well, I can counter that with a whole bunch of stuff. That's not a bad argument statistically. You can point that out. You can look at the price action in the first, as she said, the first half of the year, and you can look at a lot of other things and say, hey, and again, years ending in 2. They're significant. 32, 32, 42, 62, 82, 2002. We've 2022. You've got some major bottoms in there. The problem is, there's some stuff we can talk about on the other side of that that's even longer term, bigger picture, and more significant. The real wrench in the works is, we're at a very different stage in the evolution of our country's history. And we're seeing it on a lot of levels. And because it's different, it seems to be playing out different. And that means that discipline is a lot more important than brains. In fact, if you've got brains, you realize that and are utilizing discipline, because without discipline in this market, you're a short-term player. If you don't have stops or targets or, gee, if it doesn't hit here, I'm gone, that type of mentality, then you're going to be gone for other reasons.
Right.
Yeah. Where if this were 20 years ago and I saw this happening, and what's happened in the last 20 years hadn't happened, and we were more along the lines of what America used to be like, I'd be saying something very different. I'd be a lot stronger in my short-term viewpoint. But that's not what's going on. It is different, so I'm being different with it.
Well, thanks, Garrett.
And anyway, well, Dwayne, thank you for letting me share time with you and your audience today. I appreciate it.
Yeah, we'll be closed Tuesday for the holiday, but we will be here Monday. So if you and Peter want to jump on at about the same time you came today, sure, welcome you.
If you give me, when I get off, I'll call Peter, and
Okay.
I had just spoken to him before I got on, so I'll give him a call back and mention that. That would be fun.
Yeah,
if
I
we
look forward
did
to it.
the three of us. Peter's a fun guy. He's a nice guy.
We'll do a special extended episode.
Yeah, that would be a kick. Oh, you know what? Monday. I've been coerced, or that's not the right word, given a wonderful suggestion by my wife to
take the day off.
Well, no, that's not going to happen. But we're probably going to go up in the mountains to kind of by the gold country, and there's a place called Arnold up there, and we've, I can relax and write my book, I hope, but maybe it'll just be relaxation. That day, by the way, Monday, if this market was going to make a short-term top, that would be an ideal time to do it. Just like I made a suggestion, what was it? December, Christmas, 2018. Remember that low? I can't remember the date, but it was a few days before Christmas Eve in 2018. And I said, this would be a very logical place for them to put in a low, because nobody's going to be paying attention to the market, and people are going to be doing Christmas shopping and so forth. And that's exactly what they did. So July, is that the 4th? 1, 2, 3, 4. Yeah, no, that's
Tuesday's July 4th. Yeah.
Yeah. So July 3rd would be an ideal time to do it, because people are going to be doing what I'm doing or whatever, and, probably not looking at the market. I'll be too nervous. I'll have to look at it. That may be a place, at least for maybe 100-point correction in the S&P, something like that. It takes you down to the prior wave 4 level, maybe down to 43.50. I had a target of 43.11, but that, well, that's a nice target. It may not happen, but maybe, who knows? But I would think that we could get ourselves some kind of somewhere in here we ought, as Dwayne says, a bull trap. This ought to be a bull trap, at least a short-term bull trap, if not something more. So, anywho, I will. How about what are we talking about? Wednesday? Is that would that be?
Oh yeah, that'd be fine.
Yeah. So maybe, who knows? Maybe we'll have more to talk about.
Okay. All right.
So, I wish everybody.
We'll tentatively pencil in Wednesday at 1:30 Eastern, which is 10:30 a.m. Pacific.
Great.
All right.
Great. Well, it's nice to visit with you as always.
Always a pleasure, my friend.
And I'll call Peter right now. Give him
all right.
That'll be fun. That should be fun.
Yep. I look forward to it. Have a great weekend and a good holiday.
Yeah. You too. Thanks so much, Dwayne.
All right, my friend. Bye-bye.
Okay. Bye-bye.
Okay, guys, we're going to pick up where we left off. I'm going to move through these real quick, and then we're going to wrap up with our good word for the day. Now, if you missed the first part of the broadcast, you can always catch it on youtube.com/CFRN. Price opened below the zone. Okay, so we know that's resistance. See how price? Now these zones were published Monday morning for our members and trial members at 6:15 a.m. Eastern. Here it is, Friday, almost the end of the week. And still resistance there. Then we drop. Okay, we got red and falling. We get the perfect stack, price, step line, red and falling, BBC. And we come right down to the target, basically to the tick. When gold moves $1, like this candle opened at 1913, it's a $490 per contract move down to the target. Where did the market find support yesterday? At the zone. Resistance at the zone. Today, resistance at the zone. However, we actually got through the zone. Now, this was one big green candle that sliced through the zone like it wasn't even there. And what happened? When it ran out of steam, it retraced to the zone it sliced through and then continued in the direction of the slice. Now that the step line has crossed to the right side of blue and climbing, so we had a perfect stack on the way up. Price, step line, blue and climbing, BBC. Now that that step line has crossed to the right side of blue and climbing is directly above price, we may not touch this zone. That may be the high of the day right there for gold. Once that step line crosses, it tells us that price is most likely going to pull back to the BBC. See if it happens this time. Silver. And again, for those tuning in late, all of these target numbers that you're seeing, well, the zones went out Monday morning at 6:15 a.m. Eastern. The targets that you see, those went out at 6:10 p.m. Eastern last night. And of course, they're good for the entire session. So we opened below the BBC. We had red and falling, so we can't really be thinking about, because that's support. Okay. We get above the BBC, and we have blue and climbing. And so the open to this candle is 22.84, and it runs up a nickel to the target. That's $250 per contract traded. Then price drops below the BBC and drops right to the target. That candle opened at 22.79, dropped to 22.73. That's 6 pennies, $300 per contract traded. 2 penny move in silver is worth $100 per contract traded. Then we hit the zone, sliced through. Actually, this is part of a consolidation, but even if you want to think of it as a slice, price attempted to pull back to the zone before continuing in the direction of the slice. It missed it by, what was the high? 22.68. Missed it by 1 penny. So why, oh why, did price not make it all the way down to the zone? If you look left, you expect support here. We traded a little bit below that support level, but we didn't even come close to this support. Red and falling turns to blue and climbing. Get above the BBC, above the zone, and bang. Make a run right at the target, right to the zone. We've now been consolidating for quite a few hours at the zone. The step line has crossed from the left side to the right side of blue and climbing. So that very well may be the high of the session. And why did price stop there? Well, just look at the horizontal line on my cursor. Because the last time, see that little bitty wick? When that candle opened yesterday, it was green for a second, and then it got slammed down. So you expect that to be resistance. And it was. Okay. Now that the step line is crossed, the highest probability thing, price may attempt to overcome blue and climbing. It may attempt to overcome this high. Could trade right up to blue and climbing and find resistance. But the highest probability at this point is a drop back to the BBC. And on the euro, here's where the market opened. We pull back to the BBC. And so price is trapped. Resistance overhead, support below. Resistance, support. See, every time the market finds resistance, it goes and looks for support. When it finds support, it goes and looks for resistance. And so forth and so on until we have a winner. Bears or bulls. So the bears won this one. We get a leg, get a retracement, and we get a leg all the way down to the target. And we overshoot the zone by a little bit. Then we turn back up. We get above the BBC. And there's that perfect stack. Price, step line, blue and climbing, BBC. And run right up to the zone. Back off, some wide-ranging consolidation. We head higher, okay? And we don't quite make it to the area that we would expect to find resistance. That shows weakness in the market. You'll notice the step line has crossed the left side to the right side of blue and climbing. So what's the next high probability move? First, a pull back to the zone, and a pull back to the BBC. Pullback holds more often than not. You can see that it held here, and here, and here, and here, and here. And so if we get a pullback, we expect it to hold until proven otherwise. Now, if price were to pull back and not hold, then that would give us a window of opportunity like this. And this bullish cross that led to the extended move, the first time price revisits that area, whether it's today or a month from now, first time price revisits that area, it will most likely, 9 times out of 10, be good support. Bang. Did we do it? 44.93.75. 44.94 and a quarter. Okay, so now we've taken it out by what? 3 ticks? 93.75. 94 and a quarter. 2 ticks. We've taken it out by 2 ticks. So this is where it could get real interesting. Back to the ES 30-minute chart. Step line is crossed. Where I said that's potentially high of the day. Get below the step line. We drop back. Here's our first area of support. And our second area of support pretty much lines up with BBC. So that'd be one heck of a bull trap. To become a lifetime member with no recurring fees, no upsells, no nonsense, ever. Lifetime access to every resource we have, from the live training room to the unlimited one-on-one private mentoring, weekly trading zones, strategy and indicator set that's fluid across all markets and all time frames, Logic 247 alerts, concierge trade alerts, members only workshop on Thursday night, all that and so much more. Everything a trader needs, all under one roof, one low price. To become a lifetime member today, just go here, eminifuturestrading.com. You'll never have to spend another dime on trading stuff. You'll have around-the-clock support, unlimited one-on-one mentoring, 2 hours of live training every day, and you'll be surrounded by a community of successful traders who've learned the exact same strategy with the exact same indicators, and they will encourage you and help you, champion you as you learn. If you have questions, call Valerie 949-42-EMINI or send an email to support@cfrn.net. Okay, wrap it up here with our good word for the day. Yesterday's topic, today God is calling you. Well, guess what? He's still on the line. Jeremiah 1:5. Before you were born, I sanctified you. The word sanctified means to be set apart for the exclusive use of. The word ordained means ordered according to a plan. Here are two things you need to know. God doesn't waste anything He created, and He doesn't waste anything He can use. Before you were saved, God permitted experiences, both good and bad, that were equipping you for what He had in mind. That includes who your parents were, the places they came from, where you were educated, the number of years you spent in school, jobs you held, and the training you received. It also includes things God put inside you at the time of your birth, even though some of those things may have seemed to work against you while you were growing up. Do you hold on to ideas like a pit bull? God can use that. Do you enjoy poring through books and researching? God can use that. Are you quick to confront and excited to run right at the enemy? God can use that. Today, you may feel like you're in the wrong place, doing the wrong things with the wrong people. You may be wondering how you're going to dig yourself out of the hole or turn your life around. Truthfully, the answer may be that you can't. But here's the good news. God can. He makes miracles out of mistakes. So give Him the things in your life that aren't so good, things you're not proud of, and say, Lord, here they are. I wish my life was different, but it's not. I wish I could change it, but I can't. Then let God go to work. Because what you can't do, He can do. With Him, all things are possible. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.